Welcome back to 22 Minutes in Lending. I'm your host, Vince Passione, continuing my conversation with Tony Hernandez. In this episode, we'll discuss how credit unions step up during government shutdowns, the unique challenges faced by federal workers and veterans, and what the future holds for the industry, including technology trends and consolidation. Let's dive in. So you've gone broad, and recently I saw that you wrote on the Genius Act, right? So
Mhm.
big discussion around stablecoin right now across the entire industry, not credit unions, but also banking. Does this somehow disintermediate? What happens with things like deposits? What impact will it have? So from your seat, what's the biggest safety and soundness blind spot for policymakers when they think about the Genius Act and about stablecoin?
I think it's where I guess let me back up a bit. There's an $84 trillion generational wealth transfer that's
Hmm.
already in progress today. And your traditional banking accounts and debit card and ATM card and all that stuff, may not be around. Gen Z and the millennials will definitely pick up stablecoin. And I think the biggest threat to credit unions are, outside of, the one for one or 100%, covering, the dollar for dollar coverage of the stable coin within the banks and the credit unions. I think the biggest thing is when they go to these other providers out there that are not a bank and aren't a credit union, because it's going to be who can get top of wallet for these new Gen Z transfers. And then all that $84 trillion that's spread across all these bank communities and investment houses, that money's going out the door. And I think the biggest danger for credit unions is still being stuck in the 1990s and thinking, your mobile app is the latest cutting edge technology.
Hmm. Right.
You I was at a Steak and Shake in Indianapolis last May. But when you got done ordering on the kiosk like you do at McDonald's, and then you total it up, it asks you, do you want to pay credit or debit, or do you want to pay in crypto? So it's already here. You know, uh,
Yeah. Now,
you can
SoFi,
get.
I got to watch Anthony Noto, the CEO at SoFi at a conference, and he said, because they announced their coin and they announced being able to basically hold crypto. And he said 62% of his customer base today, right, has indicated their desire to be able to, store crypto at a regulated bank entity like SoFi. And from his perspective, it's great, right? Because he sits back, they don't get any interest on it, right? He gets to basically hold the float. And I think that's really what most of the folks that are out there doing. The question really is how many of these are going to be? Everybody's issuing a coin, right? Fiserv's got a coin, right? Everybody wants to have a coin, and it'll be the wild, wild west for a while until finally it settles down. But Tony, do you see and are you concerned about um, as we see a movement away from sort of fiat currency, the dollar, into cryptocurrencies like stablecoin, are you concerned about what happens to credit unions from a deposit perspective?
Yeah.
I mean, because I hear the chairman of the NCO Hauptman talk about this all the time, and it sounds like credit unions are doing some things, right? I mean, they are getting. I hear more and more credit unions talking about stablecoin all the time. Uh, but do you think the risk is like, 12 months away, 24 months away?
I think,
And
yeah.
and
I,
what do the credit unions need to be doing? And from a supervisor perspective, what do you expect from the regulators?
well, I think for the regular, if it was a perfect system and all those deposits were just, you were going to stay at the credit union and convert to stable coin,
Hmm.
then you have some regulatory pressures on that, whether if there's a run on the credit union or something does it. I think the biggest danger to credit unions is liquidity, because as generational wealth, transfers happen, that money's going to leave the credit union, and now what?
Right.
Now and now, they still got to meet their liquidity, levels, and they still have to get that money back. And I do think a lot of credit unions is going to hit the share insurance fund, and I do think there's a potential crisis looming on the horizon as more people pick this up, or Gen Z goes, I don't need a credit union. I got SoFi, or I got whoever else is doing it, that they like doing. And so if credit unions don't get there soon and start building the stable coin, they're going to see a drain on deposits going elsewhere, and that's going to affect their liquidity ratios.
Yeah, I agree. I agree. I think it's nice to see that the NCUA is leaning into it. And I think that's helping credit unions want to lean into it. And there's certainly some very interesting projects underway within the credit union system, which hopefully they'll bear some fruit shortly. So let's talk about the government shutdown, right? This is probably the longest government shutdown in the
Yeah.
history of the country, and it has a huge impact on the membership base that you serve. Um, so what did you hear during that period of time from your credit union members about their members? And give me examples of how they might have helped and
Yeah.
what do we do to get prepared for the next one? Because it feels like this is just yet another tool, right? Partisan
Yeah.
tool that happens that's being used at the government level.
Well, a lot of them did, they do the zero, it's almost like a zero interest loan.
Hmm.
They do guaranteed pay. If you have direct deposit there, then the credit union will extend 1 month or one pay period's worth of pay to tide you over. And that was back when, government shutdowns were about 2 weeks, maybe 3 weeks, tops. This one went two, almost three pay periods, into it.
Yeah.
Some of them did skip pays. If you could skip a monthly payment. All that did is it just pushed the debt further down the road. But you didn't miss anything. And then some did loan restructures. I've seen we saw this back during COVID. They allowed people to cash in you know their CDs without penalty. If they needed that money. So there's a lot of things that credit unions can do during that time. And I think, I don't think it's a safety net for the government because they don't fund any of that stuff, and it's not as bad as it could be. And so you kind of buy the government a little time to get their act together. But it got really close this last time because, I mean, I think the administration did some things where they moved some money around, and I'm a former comptroller. I don't know that I'd be comfortable, but the fact that the president if he's signing it, then okay. But when I'd never seen that before, which was interesting. And then I know Treasury did a lot of stuff, moving some money around to kind of tie over. And then you had the credit unions, that got to that point. Um, Things that we're seeing in a crisis like that, and we have two amendments in this year's National Defense Authorization Act, and that's restoring the CDFI fund, which helps with liquidity and doing these things.
Sure.
And then extending the central liquidity facility within the NCUA, right? To give small credit unions or any size credit union, a little bit more liquidity so they can help their members out and help them through this. And those are two things that we're hoping stay in the NDAA under the banking title. And we, using like I said earlier, using our experience with military and veterans, saying this affects financial readiness for the military. If you're on the front lines and a government shutdown happens and your family can't make the rent or can't pay the electric bill, that affects your ability downrange to perform your mission. And like I always say, that aircraft mechanic, worried about it might not put in the oxygen bottle all the way on that jet. And when there's a pilot flying that passes out at 60,000 feet. It's just not good.
Now,
So
as people have families and they got financial concerns like everyone else, right? It's going to affect
absolutely.
their attention to their job. They're only human. And Tony, do you think that is there concern in your mind that in the future this particular population, government workers, they're viewed differently for when they apply for loans because the potential instability of their income, or do you think that's real? Is that something to also sort of emphasize?
I think it's real. I think you look at other things, emergency funds and other access to capital at the individual level. But military is already that way. When you transition out of the military, you can't. It's not a good time to apply for a mortgage because you'll get denied because you don't have proof of another job or another income coming in.
Mhm.
Just say you're Air Force retired or government retired, and even worse, the Defense Finance and Accounting Service doesn't send you any money for the first 6 weeks of your retirement. I mean, until your
So
retirement
you have
kicks
a gap
in.
to fill.
Yeah, Jennifer's a realtor now, and that's what she advises her client. If you're going to apply for a mortgage, do it 6 months before you retire, before the lender can see that you've applied for retirement, or do it after you're safely on the other side with the job. So I think if you take that example and apply it to all federal workers, is going to be, I think, the longer whichever parties in Congress uses government shutdown as a tool, it's almost become regular. I remember the first government shutdown when I was a lieutenant in the B2 program, and they went on this furlough, and nobody knew exactly what that meant. And now you've seen over the last 10 years or 15 years, they become a lot more frequent. Now they're longer and more painful. And so, yeah, I do see that as a danger for federal workers.
Hey, Tony, I want to go back to something. You're talking about some of the gaps and the challenges that federal workers and, obviously, veterans would see in funding. And one of the things we've been looking at is on the education lending side, you know, what are the unique challenges for veteran students? And we're hearing things like, well, even with the GI Bill, there are gaps in funding for them, right? There are issues they encounter because they're caps, they're family caps. They don't realize they're hitting the family cap. Uh, if they're at a state school, it's covered, but if they go to private, right, they're going to run into issues there.
I am familiar with a lot of the challenges that come with that, but it's also something that when we talk about veteran member business lending, some of that is getting your education to transition into a better role outside the military, and it all starts. I used to always encourage my airmen, um, go to school, get your community college associate degree, because the
Right.
Air Force will pay for that, and you're foolish if you're not. Get your upgrade training first. Learn how to do your job and get your badge and your training, and then let's get you into school. And then, if you can do it, go get your 4 year degree, or get your certification. If you're ASE certified, you can
Right.
open up your own auto parts. Or if you're an electrician, get through all the apprentice and the all the licensing things you have to do, and open up your own business. And I always encourage my airmen, much as I love them and wanted to stay in the military, I wanted them to have that choice when they got out. But I don't want to saddle them with too much debt, or not being able to get it, because if they have a dream, they're going to go find the money, and I'd rather they find the money with a trusted institution that's looking out for them than going to get a loan from somebody right outside the gate that doesn't have their best interest.
Yeah, we're going to clock some time on it. We started doing the research. There's about 50 schools where the majority of veterans go to school. And I think there's certainly a very finite group of employers who will turn around like Raytheon and Walmart and Amazon, and it runs that barbell, right? When you think about, where veteran students wind up going after they graduate and get their degrees. So last question, if you could launch one national initiative right now, fully funded, staffed, and approved, what would it be?
On national initiative. you know, Fully funded and staffed. Uh, I'm going to throw a bone, small credit unions. I do think we need to focus on keeping them robust, and healthy. I do think they have a lot of political power that never really gets fully mobilized. And so, how do we do that, for the small credit unions to move that forward, and I think, well, not think, we're already moving in that direction with DCUC, is how do we help them out? And that was something, talking with Sam Plester earlier, was something we had talked about in the past. And so I do think that's something that we're going to have to do, just because the pace of consolidation is going to pick up. That's something that we just started really about a month ago, working with a lot of small credit unions. Our we cap our dues. They're capped at 22,500, and then it goes down, and it's very equal. But We have a 7-member board of directors, and 2 of those directors, including the chair, are from small credit unions.
Mm.
And that means something. We get that small credit union perspective.
So if we did this again this time next year, what do you think we're talking about?
I think we're talking, well, there are several things, I think stablecoin and everything we talked about during the stablecoin segment
Hmm.
of the
Yeah.
conversation. I think we're going to be seeing that. Um, I think we're going to be seeing more AI and the challenges with AI and who's doing it and who's not, and who's policing their AI, who's taking advantage of that and using it, and I think it's going to challenge credit unions. My wife and I, when we remodeled our kitchen, we didn't use a credit union, to do the financing because my contractor, I needed to give him yeah, we've got the funds and let's execute it,
Hmm.
otherwise he was going to go find somebody else that was ready. And Jennifer wanted her kitchen remodeled by Thanksgiving. So I couldn't wait the normal 3 weeks. I went with a lender that got me the funds in my account that afternoon. And that's all AI driven. And I think the other thing we're going to be talking about even more next year is something called post quantum computing. And when you use those quantum computers, you can start cracking encryption codes and stuff. And I think you're going to see a lot of people scrambling at the last minute, to do that. So I think in the financial services industry, I think those are things we're going to be talking about. Plus, there'll be the all the mergers that are happening in our consolidation in our industry. And I think those are the industry-wide issues that we'll see this time from next year.
Oh, excellent. Well, Tony, look, we're going to leave it there. Thank you so much for joining us. I really appreciate your time.
Thanks,
And
Vince.
as always, thanks to our listeners. If you haven't yet, be sure to subscribe so you never miss an episode. And I will see you back here on our next 22 minutes in lending. Tony, thanks again.
Thanks.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, please be sure to subscribe and leave us a 5-star review.